So take a look at gold, and this trend line dates back to the bottom of '08, and it seems to hold, as a fairly accurate trend line as far as where prices find support at or resistance. You can see that in this case it gapped down, and ever since we have now what basically appears to be a back test of this same trend line. Do take in mind that we have bearish divergence on the MACD. We did get a bearish cross on the stochastic along with the divergence here as well. I don't see a reversal yet, and it's also important that you note we did break above this previous high, so technically with this breakout we should either consider it 1, a bull trap, or 2, it's now consolidating before it tries to move a little higher. We don't have a series of lower highs and lower lows, so we can't make the judgment that it's ready to roll over. You could even say, well, this is a sort of a channel that it's in, and so we'll have to wait and see exactly what to make of this. I want to add one more thing to gold, and that is, I have this trend line, like I said, that I've drawn from the '08 bottom, and the reason why I have this trend line in play, I'll explain, and that is longer term trends hold stronger in terms of their direction. You have long-term trends, you have intermediate-term trends, and you have short-term trends. And you draw your trend line according to that time period. So in this case, we have a longer-term trend. And as I've shown you before, each time that prices either come close to this trend line, they either find support or they find resistance. And it holds as a much stronger point of resistance or support than to a shorter term trend. So let me explain. This trend line drawn, if you see, you would say it broke this short term trend. Well, in that case, absolutely, you'd go long. This is bullish. You saw the break, it formed a channel. You can see that. Maybe it might act as resistance if it gets above at this level. We'll have to see. But this short-term trend does not hold as a stronger point of support and resistance as this trend line has, because it has proven itself. So the point I'm making is that if we can regain this trend line, then we would almost certainly break above these highs, and it would also imply that we can regain the longer-term trend line, which makes this even more bullish and which adds validity to the long-term uptrend. You see, if you break this long-term trend, then technically prices have shifted to the downside. But if you can regain it, then that's even more bullish. So in theory, if you can break above that trend line, you would exceed these highs, you would go back to retest these highs, and more than likely go back up. And then you could classify all of this move as basically a large consolidation. And with silver, I have the SLV up, and with this downward trend line, you can see that prices have slightly broken this downward trend line. Now, sometimes prices may overshoot trend lines before they give back. I'd like to see more of a decisive break. And another thing I'm watching is that silver has really not participated like gold has in its run-up. You can see that silver is basically back at these highs, whereas gold is challenging these highs. So gold really is at this level, if you think about it. So I'm also just keeping that in mind, just because I'd like to see silver participate more to add validity to this bullish move that we've seen so far in the metals. Now with today's move in the S&P, prices were able to slightly breach above the May highs of last year. It was, the top of the head and shoulders topping pattern that we were able to exceed. Now, with today's move again, the stochastic was able to curl back up. I think it was there to just better define the short-term divergence. We still have the longer-term divergence. Note that we are at the apex of the pattern, and Usually when rising wedges break down, they break violently, so keep that in mind. But everything still is bullish. We were able to remain above the 10-day moving average. No reversal has been, we can't identify a reversal yet because there are no series of lower highs and lower lows. You can see how the trend is becoming more and more exhausted in that you're seeing very little upside each day, and a lot of people associate with like a bull market as this grind higher. Well, this is not really a grind higher. This is kind of like floating higher. This is on extremely light volume. You know, the high-low range of each candlestick that you see is very minimum. I mean, nobody, it seems like, is participating in the rally. If people are buying at these levels, they're buying at an extremely overbought, toppy condition. So keep that in mind. Okay, and with prices moving into the apex of the rising wedge pattern that we saw in the daily time frame, as prices have inched their way into that apex, we have formed what looks to be a rising channel. Okay, and now within this rising channel, let's take a look at the most recent price action, and you can see that we've got 1, 2, and now 3. It almost looks like we have a triple top so far. It's unclear yet whether this move up is almost like the first leg of what appears to be forming now a bull flag before we can resume higher, maybe get to this part of the channel. We do have negative divergence all over the place. The stochastic is indicating that we are short-term overbought. We'll have to see how that plays out, but this rising channel is still in play, and we would need to see a break down below this lower part of the channel line, and that would more than likely correspond with the rising wedge accelerated trend line breaking in the daily time frame. Okay, so now we're looking at the Russell, and in comparison to its previous highs, we're still about 40 points away, basically. Again, the Russell is going sideways. We're still either in a consolidation pattern or a distribution pattern. We won't know until we get a break either to the upside or the downside to validate this pattern. Now with today's move, we did gap down in the morning, but we regained that shortly after, and the stochastic was able to curl back up. The MACD still remains in negative territory. Sorry, the histogram bars do. We're still getting the bearish cross from the this is MACD. The dollar on the daily time frame. We still have this channel line in play, this accelerated channel line. Actually, the full channel comes in like this, but it appears to be holding up fairly well, and you can see that the MACD is now trying to form a divergence where this part of the MACD is holding up higher than this part, and yet prices are moving lower. You can see similar to that on the RSI. It almost looks like a double bottom. Now, again, I showed you last time that sometimes prices, okay, we're at the 50-point line, and it's important to understand that in uptrends, usually the retracement goes to about the 38 to 50 point. Now, often they go to the 61.8, and in this case, it was a severe decline. I mean, we basically retraced only about, not quite the entire move, but we did come back to a support level, and it was, I think this one was actually at 78.6% of the retracement. But in strong uptrending moves, you see generally a retracement to the 38.2 or the 50, and sometimes the 61.8. In downtrending markets, you see majority of the decline regained. You know, you see more of a back to the 61.8 to even the 78.6 level. So understand that the dollar so far is showing strength in terms of its, intermediate term. We still have this rising channel in play. I mentioned to you in the last video that it's likely that we'll find a support for the dollar in this area, and that would come in at a confluence of support being at the trend line as well as the Fibonacci retracement levels. I even think that the 200-day moving average comes in this area We're also seeing a divergence forming on the MACD and on the RSI. So you're playing your odds. Also, you might want to consider when you are looking for the next move higher in the dollar, but as of right now it's still bearish. You could draw a downward trend line as like this, see if prices are willing to break above this. So keep in mind of these things, these tools, these kind of techniques to look for. Okay, now here we have the US dollar. This is on the hourly time frame, and you can see 1, 2, 3 points of resistance that this downward trend line has held. We did get to oversold levels seen on the MACD and the RSI, but in order to get bullish, guys, we have to see a break above this trend line, then a back test. We have to establish a higher low before prices can resume to the upside. Now the problem is, one, this almost looks like a bear flag. This is a very weak uptrending move, and we don't really see a strong divergence on the hourly chart. So it could be that prices are going to move lower. Now we're talking about the dollar. So if the dollar moves lower, the S&P, the other indexes should, in theory, move higher. Now considering how overbought we are, it's likely they're going to either drift higher or move sideways like they have been. And also the metals should also rise. But we'll have to wait and see. This is just kind of guessing at this point, but like I said, this pattern looks very, almost like a bear flag, and if prices do decide to go lower, then that would better define the hourly divergence on more than likely all of the indicators, then allow for prices to get to fairly oversold levels, more oversold than they are, and then they could initiate a reversal, a powerful reversal.